maybe because you don't like when I sleep.
No, not doing.
Yes, that's exactly what happened.
No, no, no. Sasa. No. Sasa.
Ready? Which one?
Oh, pizza. Oh, pizza.
Good morning, guys.
Hey,
How you doing? Alrighty. So yesterday, how did you guys get on? Price just couldn't break underneath these lows, and then we got just like tight little consolidation just before New York Stock Exchange opened, and then they started pushing up, and then they did this really tight grind higher. So we filled the gap on the other indices as well. So I believe there's probably a bit of short covering going on. We've got big news today, CPI. So it's likely, it's likely it's going to have a pretty dramatic move, I'd say. We'll cover more of it when more people roll in. Is anyone in any? Michael, Rob, did you guys? You're long now, okay. Yeah, I'd like the that Chinese news. Everything kind of across the board had a good spike up around 2:40 in the morning, which was like 2:40 UK time, which seemed to be about when China released their data. I thought it was around 3 o'clock that they did their data, but the move started at 2:40. So I'm not sure exactly what it was at 2:40. It was Nvidia, was this here? Nvidia predicts the approval to sell those chips to China again. Everything exploded. Yeah. So across everything. So, because I was keeping my eye out, I had US 30 buys yesterday. 200 pips in that news. Oh no, this was. See, the time is a bit off. This is 3:30. So this move. Wait a second.
hi guys.
Hey Simon, how are you? Oh no, it is 2:30. Strange. Sure, I just said 3:30, but I was on the other thing. Yeah, around the same time. So that big move there, 240. See, it's kind of strange because this is US 30 doesn't even have Nvidia in it. but it moved up, yeah, big time.
And
Like I was in buys on US 30 yesterday. Thought that I wasn't really sure about German 40 afterwards, but I thought what they'll do in the US equities. Thought there'd be a good chance that they push price up, that they just grind it higher ahead of this CPI news, and then use that kind of grind higher to basically. I'd say they're probably getting out of their position. I'd say the market's going to be pretty thin by the time it comes around to CPI, and then they'll regroup. So price ended up grinding, and there's a nice little channel that I took advantage of yesterday afternoon. Yeah, where was it? Yeah, it was here. Was it about 4 o'clock? Yeah, it was right. So they had the initial impulse up from the New York Stock Exchange, where we pushed. Price came back down, kind of settled, and then they started getting into this channel across here. So it was about the right time. It was in those BB lives. I was looking at US 30 as a potential. It's been pretty sloppy trading, to be honest, for the last week and a bit on the US indices. But you can see it was just moving this nice little channel formation. So it came around 4 o'clock. I was targeting on there to get in some buys from around this area. This is a previous little bit of structure before price exploded. And then price tried to get it once, tried to get it a second time, came down a third time. And you can see the stochastic was picking the moves pretty well, where it was just going from overbought, oversold. I thought, oh, man, finally, hopefully this will start to move higher. And eventually she did. She started pushing up and out of here. And then it wasn't too late, but you got this really kind of clean grind higher afterwards. But I was out by then. I wasn't able to hold on to it that much. It's given after 6 o'clock, you can get some pretty wild moves with old Trumpster. You never know what he's going to bring out to the table. So that was all she wrote for that trade. And then I saw overnight that, yeah, it must be that. Still not sure if it was Nvidia only that caused that. But I'd say it's probably something to do as well that China had some pretty decent news with their stuff. So their GDP grew, industrial output is up. I mean, you've also got to put a question mark on this data as well. Anyway, everything liked it. So NAS is where you'd expect to see that because it's got Nvidia in it, and that makes sense. It's really boomed. S&P, the same thing. US 30 doesn't have Nvidia in it, but probably also affected by the same. Now, if we look at the bigger picture though as well, you can see this has been pretty sloppy, this trading area. Been really for the best part of a week or so. Kind of haven't really got anywhere. It's kind of stuck in this channel. And then on the Nvidia NAS we've broken it now, but that was also very similar. That price was more or less inside of this range. Okay, now making it break out like so on CPI day, very suspicious. Very, very, very suspicious. So we'll try to find a trade as usual, but I'll most likely not be holding anything when it gets time for CPI to come in. So they're also expecting, hey now, yeah, you didn't see last week. But I'm seeing some mixed reports regarding the Trading economics. Is this the same one? They've got it the same, I wonder. Yeah. Yeah, so this is oh no, wait a second. No, that's the same. Yeah, just trying to read it differently because previous and consensus is on like on Forex Factory, it's forecast then previous. This one is previous then consensus. So I've been hearing some mixed things though, which has got me a little cautious. That when this news comes out, the core inflation rate, a few people have been questioning whether the expectation was 0.3%. It's been 0.3% for the last 4 months. I'll show you in Forex Factory just because it's easier to show. But core CPI, you'll see that they've been basically always forecasting 0.3%. And then the last 4 months, it's consistently come in underneath their expectations. So the person that I was listening to was from their sources that they believe that the forecast was actually lower. And that's what they often do, is if inflation is consistently coming in underneath, what they'll do is they'll lower their expectations for the 5th time. Well, it doesn't have to be the 5th time, rule of thumb, but they'll lower their expectations because it's been coming in underneath. He said there's a very good chance that core CPI will actually come out above expectations because they would have ratcheted it down. But I'm yet to see it on here. But it was only last night, that I was looking at CAD CPI, and this one yesterday said 0.2, and then last night it was changed. It was revised down to 0.1. So they do change these things. So whether they'd seen something or maybe they'd seen an old number and then had been ratcheted up, you just don't know. So with anything though, with news, like our job's not to predict the news. Our job is to trade what people would expect the news, or like either just trade after the news, or if you're going to trade through the news, then it's our job to make it safe. So whether this comes in hot or soft, who knows? They've been saying that inflation should come up from tariffs at some stage. Yet to be seen. So is it going to come in this report? We'll see. But there's a fair bit of risk, and if you're an institution and you're holding big positions, your job's not to hold much risk. Your job is to buy low, sell high, buy low, come to these kind of news events when things anything can happen. Could be a surprise ups, could be a surprise down. Your job as an institution would be to buy low, make it look irresistible for retail or someone else to buy it off of you for a better price, and let them shoulder the risk, and then wait for the news. News comes out, and they can make their next move. Okay, so we'll see what the news comes out. So I'm sure there's going to be a bit of I'm sure a lot of this move yesterday and the Asian session today, I'm sure a lot of that was make it look very nice for buyers to buy those positions off of them. And I think price can probably more or less just track sideways here, I guess. Or like any sort of moves before CPI could just be repositioning to try and manage risk. Does that make sense? So we'll look for a move as always. Not going to stop me from taking a trade, a little scalp. But I will make. There won't be like. Yeah, I'll be making sure that profit's taken. I'll probably even be flat off by the time it gets to the news, or at least in a reduced position. So also, I don't want to shoulder that risk of going through news. If it pushes in my favor, great. You know, I'd love it to do that every time. But how would you feel? Always ask yourself how you'd feel if you were in, say, you were in a position and it was moving nicely. Let's just say we bought, for example, and we had a bullish bias and we thought we could push up and where could price go to? Let's just say we bought and we're targeting up here. Okay, let's just say that, or say the previous, like Thursday's Friday's London Open. Let's just say we're targeting there. I'm not in a trade. This is just an example. Let's just say we're in a trade like this and price is pushing up and you're sitting roughly 2 to 1 in profit. So say you risk 1%, you're sitting at you're sitting at plus 2% at this point. How would you feel? I mean, you feel great if it then slipped your position, you'll take profit, and then you ended up with a lovely, lovely trade. But there's a risk involved there to go with the news. What happens if it comes in unexpected and price shoots down and takes your stop loss? You'd feel pretty pissed at yourself for that, because you knew this was a risky event. You knew that you took the risk, and you need to ask yourself, look, I'm going for all or nothing. I'm up 2%. My stop is here. Even if I had moved my stop to break even, if there's slippage, it won't honor your stop loss. It will just close you out at the nearest available price. Mentally, what would that do to you? That's the thing. It's not, for us, it's not the money figure. Like if I lost 1%, maybe more if it slipped me, 1% is not the end of my week. It's not the end of my career as a trader, not the end of my account. But if I was sitting plus 2% and I knew that I traded through a risky event like news and I ended up with a negative result, I know mentally I'd be thinking that was just a greedy bastard move of myself. And what could I have done?
Hi, everyone.
Hey, Danny. I'd be thinking, what could I have done with that 2%? You know, I could have just taken it, not gone through the news, and then I could have just regrouped after the news to see where I want to make a move next. You know, the other option is if I'm in a trade and it's moving nicely, then the other thing is if I do want to be part of this event, I don't have to be out of it completely. But why don't I just make it so that I can still have a piece running, but if it does turn around and it stops me out, then I'm not going to be annoyed about giving back everything I made. Maybe I close like 80% and I just leave a piece running. It's not the money figure that I'm interested in. It's more just if I close some and then leave a remaining bit running. For me, that would be more just getting a thrill from seeing if it feels right. But if it did to reverse on me, then it wouldn't be an issue because I've already taken most of the profit. I've just given back a little bit. So you've got to ask yourself, what's the benefit from holding through news? Especially for news like this. Okay, news like this to me is very much a flip of the coin. Okay. So always got to weigh it up. Always weigh it up. What's the benefit from taking that extra risk? And if it doesn't work out, are you truly comfortable with it? Because it's not a monetary thing, really. It's more of a did my set of rules as a trader allow for that? One thing I was saying to it was a student the other day, actually. It was on their account. It was like trading a small account, and they were in a trade, and it was about $120 in profit on this trade. I think about 5K account, so like 2% up. And they were like, "What would you do? Would you take profit now? Would you just leave it running?" And I was saying on that, because it was a bit more than 2% up, I was like, "Well," he goes, "because it's $120. Is it really worth it taking it now?" But you got to think that on this account, it's not the money. You got to wipe that money away from it. This is a trade, so it doesn't matter if it's a $1 trade or a $20,000 trade. The thing that makes that is important is you trading for consistency, because if you can turn a $5,000 account into, say, $6,000, but you know that you're very comfortable with the actions you're taking, then it's not about you trying to grow that $6,000 account to $100,000 or $1 million. It's about you trading consistently enough to feel comfortable to keep investing into your account. So you make your account, you put your account from 5,000 up to 6,000. You're doing very well. You're managing your trades very well. You're taking good decisions, sound trading decisions, taking some wins, taking some losses, but trading overall very comfortably. When you get to 6,000, you're not trying to grow that 6,000 to 10,000. It makes sense that if you're working, is you pay your bills, you invest some money, you put some money in savings, and then whatever left over, you maybe you put more money in your trading account. Because if you can consistently do 1% or so, or a few percents a week or a month consistently, then it's not about trying to grow your account to the major goal. It's about growing your account, putting more money in it, and scaling it up. Keep on taking trades, keep on making some monies, keep on adding money to it, and scaling that account up. You know what I mean? That's the idea of it. Not having a $5,000 trade and thinking, "Oh, I want to get this as quick as I can to $10,000. So I'm going to take some extra risk." That extra risk that you take every time it backfires on you, it just takes a little bit of your confidence away. Anywho. So with news days, point is just be careful. Be careful. It's not the money figure. It's the other issue. It's the other risk involved in breaking rules, doing things that you knew this was risky, and I took the risk anyway, and it backfired. If it worked out perfectly, then there's no issues. If it worked out perfectly, it's just the extra risk from it not working out. Not just money, just for your trading plan. Because you need to have confidence. Confidence is everything in this. All right, so let's check out German 40. So we don't have any news to worry about right now. We've got some news of Europe in a couple of hours' time. The zoo sentiment. They're actually looking for good numbers. Pretty high numbers here, 50. They had a 50 odd in March, but then the last time they had a 50 odd, we're going back years, man. Absolutely years. So from February 2022 was the last time they had a 50 odd on this, apart from the March one. So yeah, they're pretty optimistic despite all the doom and gloom that you hear on the news about Europe's economy. They're actually pretty positive. So that's a good thing. Then there's not much until here. We've got earnings season upon us. So if we go to NASDAQ earnings, today's report? JP Morgan are reporting today. Wells Fargo, BlackRock, Citi. So you got some pretty big names here. Not massive market cap, apart from JP Morgan. All these other ones are pretty small. Tomorrow we've got Johnson & Johnson, Bank of America. Or ASML would be a pretty decent one. Then Thursday we've got TSMC. Friday, all the big stuff happens next week. So Tuesday we've got SAP. Wednesday we've got Google and Tesla. Thursday we should have Meta. No, sorry. Oh, they're normally like pretty close to each other. So Google and Tesla. So it must be next Tuesday. That will have Wednesday, Meta and Microsoft. Thursday, Apple. And then Nvidia's, ages away. So by Friday week, so by this Friday, by the 1st of August, so over the next 2 weeks, we'll have about 80% of all the companies having reported their earnings. So we've got some big ones here, just be careful. So like when they report it, just remember they report after the market close, these big ones. So about 9:15ish PM. It's meant to be a 5. They report around then. So that's UK time. So for, 6:15 AM, Australian time, Eastern Australia time. Get high impact news. But so just got a few banks today to report, and then we've got the CPI. Okay, so what do you guys think today? Long, short? I think it's going to be just probably chop. I reckon chop on a CPI. Let's go. When was the last CPI? Let's have a look at what they did. Last one was June 11. Go to date. June 11. June 11. So this was this day. So the London session. See at like about 128 pips it moved. We pushed up initially from the open, and then we kind of just chopped around. And then that news from CPI was this candle. Okay, now it's pushed up, spiked up, and then reversed, went all the other way. So then May 13 was the previous one. So let's go May 13. See what the London session did. London session was just crap, just sideways all day. Okay, let's go to the next one. April 10 and then March 12. April 10. So this was the day. So just one-sided, just drifted. Oh, huge. Oh, April 10, this is when everything was going crazy with the tariff stuff. So I'll have to, just this one little candle here was 270 pips. Even this one little candle here, even that one little candle was 150 pips. Yeah, so we'll just ignore that one for now. That was crazy time. So March 12 and Feb 12. So March 12. Pretty big day, that one. Feb 12. Feb 12, a bit more normal again, just sideways. So I know March and April were pretty crazy times in this market with all Trump's tariffs and everything. So I'd say odds are we don't get a dramatic move. So I'd say looking for a breakout would be pretty dangerous. Pretty dangerous because I just don't think the volume will be there. But you could, but I'd say like if it's low volume, I'd say trading between zones is probably the safest play. Okay, I don't think it will crash down. I don't think it will crash down, but I do think there could be some bearish pressure. Does that make sense, what I've just did, guys? Just sort of like went back and looked at previous CPIs just to see if there was some sort of like correlation, some sort of behavior patterns. Got a little zone here where price was support, well, bounced on Friday last week, and then this is around the London, around that London 50%, kind of New York made the highs, rejected. At the moment, it's looking like a bit of a rejection from this 30-minute candle. Right over here, Asia consolidated, kind of drifted higher, but we couldn't break these highs. Getting almost oversold on the stocky. We do have a little bit of a consolidation. So maybe if there's no real buyers to show up from the London Open in a minute and a half's time, we might actually just drop straight down into that zone. This is a little piece of price action. This triple wick area, and then that would also take this is the Frankfurt Open right here. So maybe we get a little bounce from this zone, this pre-London. We might get a little bounce from there, like go down into this area and then bounce back to that green line. That would be about 34 pips, about a minute for that to happen. If it dropped into this area, maybe a little no wick candle as well, but maybe there's like a 50 pip move. You can just trade inside of here, trade the range. I'll get everything set up. Don't particularly want to take a trade from the open, but kind of tempted to do something like this. Kind of tempted to do something like this, but not like, I don't want to like take it. I don't want to catch a pen in order, but let it like sort of see if it reacts from here. But here's the open coming up on us right now. Okay, here's the open now. Let's go to the 1 minute, let's check. Okay, kind of reacted at that zone that I drew. We go to that 10 minute. That was that little zone, that triple wicker. So it tested it, see if it can push up. Retest this green zone. I'm happy just to wait, not actually take anything just yet. I'm kind of thinking that it should retest this little green line. No, it's trying to do it. Trying to do it. So just because that's like takes out this little consolidation here, a little bit of demand, probably just low volume today. Hence why I was like, probably just react from here, push back up. Got another little area across here, which makes sense for a bit of supply. Price just traded between the two, just went down, pushed up, kind of filled these little wicks a little bit. There we go, touched it right there. Just a little bit of a tight range though to take a trigger on, but it's about 30 pips. Anyone take it? Very tight range, yeah. Yeah, I'm happy just to make the plan, but not actually execute on that one. But did it make sense? Did the price action make sense? Like this little area, I've been pointing this out a bit. This little overlap of candles. Oh, I misintroduced a spread. Oh yeah. Oh, you put a pen in order, yeah. Not a market execution. All right, so now London's nearly 5 minutes in. This was the London Open, basically pretty much right in the middle of the day so far. So I just can't see London, given what New York did, I can't see London rushing into anything major. So I wonder, let's see if it can push up into this area and then see what it does up here. Hey Nish, how are you? So first 5 minute candle in the bag, and it was just a doji. So let's just see. So that idea is done. Bouncing, retesting this area. So let's see where London wants to push it now. One second, guys. I'll be right back.
Eggs? Want eggs? No. No? You sure? I think you do.
She does it because the size of her monkeys she got from you.
Oh my god.
They're like proper nuggets.
Jeez. Of course it was from Maddie, that's yucky. Yucky. We don't eat boogies. Do you want eggs or not? Do you want eggs? This is what we eat. We eat food. We don't eat boogies. Ay, ay, ay.
Okay, I'm back. Sorry about that. Alrighty. So now we're pushed into this little demand zone from Asia. Stocks open up pretty good. Oh, nice one. So let's have a look. Oh, mine haven't updated yet. Another 5 minutes, 5-10 minutes for me. What's SAP up? See Rheinmetall's up, Merck's up, Volkswagen's up. A little 0.6, okay. You know, it's confusing. This Merck, MERCK, I think it is. Oh, 0.06. Oh, okay, so it's tiny. Yeah, this Merck company, this one, very confusing because there's two companies named that. One's in on the German stock exchange, and then there's American Merck as well, but completely different companies, but both have completely different products, but in the same line of like oncology. Very confusing. Because when I heard Merck news, then I was like, oh, because I recognized it, but yeah, completely different company. You have MBGD from Merck. MBGD. Oh, GD. Mercedes-Benz. What? I don't understand what you're saying. MBGD is Mercedes-Benz. You don't have Merck on here? Okay. Okay, so stock is getting a bit oversold here at this previous little demand zone. Only 43 pips in the first 12 minutes so far. So that's, yeah. very good chance it'd be slow because of CPI. What's your bias, guys? I didn't ask. Just general? What are you looking for? You thinking buys? You thinking sells?
I'm not convinced one way or the other.
Eventually,
What do you say, Danny? Longs eventually.
I think so. Yeah,
Okay.
I think so.
Yep. Simon saying sells. Yeah, dig in deeper into this little zone. Tom, no bias. Oh, where did you say the MMG was, Tom? So 24114. So down here. Right here. Yeah, so to me yesterday's move, the way that it grinded up like so from here, like it pushed up, and then after London closed, they just kept on grinding up. To me, that's such a suspicious move. And we didn't have any real resolution, did we, to Europe and China and the US standoff? I didn't see anything. Did you guys see any? Like, saw a couple comments here and there, but nothing actually like concrete. Whether EU had done anything enough to delay any, like, this tariffs coming on to them. Yeah, I didn't see anything. So I thought this move was just, to me, what explains this move to me is push it bullish to try get people that buy the dip to buy it, and then let them hold the risk going through the news. To me, that's what it felt like. And if the news comes in, and it's soft CPI, I'm sure the market's going to return to risk on and rally. But there can be manipulation as well, because the way it seems is people that are holding longs, let's just push the market up, grind it higher. There's just, like, the way that it moves so slow, to me, is just, who would be wanting to sell that then? So people would have bought into this. This Chinese news would have attracted a lot of buyers, I'm sure, after seeing a big spike up like so. So there'll be people that have bought this area, and they're going to have to show, like, it's not might not be a bad play, but you're going to have to shoulder the risk now going through the news. So now, Nish saying, do you think it's a fake move before the sell? I don't think it's a fake move, as in, I don't think it was a pump before the news and then the news comes in and it dumps. I don't think that. What I think is it pumped, made it very attractive for people to try get into it, because people are just so attuned, especially like people that are just looking at like higher time frame, thinking buy the dip, because it came down, like there's a nice little trend line there as well, more or less. So I'm sure there would be people that have been very comfortable just buying this dip. Now, for the news, that when it's going to come out, we don't know if it's going to be positive or negative news. So if it's negative news, if its CPI comes in lower than expectations, because of the nature of CPI, the initial impulse could very much be pump, right? And people be like celebrating early on, and maybe it just, like, the chances are of it just pumping and then holding and pumping, from my experience of CPI, is a pretty low probability for it just to pump one way and stay up there. A lot of the time it'll pump, then it'll do this is where institutions are out of the trade already, and they see that price pumped, but now they're not part of it. So now what they'll do is they'll engineer a way to get in. So a lot of the time they can manipulate price, they can push price down, get early, anyone that sort of bought the move or held through the news. If you're still holding, this is where it can be really dangerous, because you can get an overcorrection. Thank you. You can get them to, people with paper hands might get very scared that this whole thing is reversing on them, and it will force them to liquidate those buys at a worse price. But institutions will quietly be wanting to buy that up because they saw the news as well, but because they push price down, that'll scare a lot of traders into selling those positions to them for a much better price than I say this move they engineered, pushed up. They're out of the trade, low volume, probably just bounce around these levels, no real one side committed to another. The news comes in, just to say it comes in lower than expectations. That's good for equities. Equities will pump. Institutions will be like, okay, now we need to get into this trade. How do we do it? They can either just buy the highs, or they can push price down. Anyone that's bought already retail side, holding it, will be very concerned, most likely get stopped out. Maybe they're waiting too much leverage. Maybe they'll just decide this is not worth risking. Hold in this position, will sell. Institutions will buy low, and they'll buy up again. So institutions bought here, got out here, got in again lower, and then push price up. Does that make sense? If it comes in the other way, so let's say inflation does indeed come in hot, and people worried about company profits from higher tariffs and worse trade conditions, and producers having to eat the tariffs, cutting their profit margin, that'll result in reduced earnings. So institutions do the same thing still. They pumped up, they offload the risk to people willing to hold it through here. The news comes in higher than expected. Fed probably, and central banks around the world, a little bit less reluctant now to cut rates. A bit more reluctant now to cut rates. Market sells off aggressively. Now, this sell-off from the market moving down is not a result necessarily of the news. It's the result that the buyers are already out. And this news, that when it pushed down, justified their decision to be risk adverse. So you know what I mean? So if the news comes in, it doesn't necessarily mean it's a pump before the news dumps. It's a pump before the news, uncertain result. Result comes out. It's either good for stocks or bad for stocks. If it's good for stocks, institutions can manipulate price, try to push it down, get a better position. If it's bad for stocks, it'll just go straight down, most likely. And it'll go down to a level where institutions are happy to quietly accumulate again. So it doesn't have to be, it doesn't have to be sinister as in pump, get all people sucked in and then dump it on them. It really will be what the news comes out as, whether it's higher than expected or lower than expected. If it comes in as expected, it's kind of a difficult situation. Like, we do want it to be a one-sided miss generally, because when it's a one-sided miss, more than, I know they're not expecting it to be 0.3 on the dot, but let's just say they expect it to be somewhere between 0.26 to 0.34, this kind of range. Even if it comes in 0.26, it will round up to 0.3. If it came in at 0.24, for example, it's only slightly outside of their expected range, but it will round down here to 0.2. So it could look much more dramatic than it actually is. If it actually did come in at 0.2, it would still be 0.2 on here. But you can see, this is actually quite a bit now outside of their expected range. So if it comes in like this, now you have a much more volatile event because it's outside of their given expectations. So the devil's in the detail. But before these big newses, you've got to appreciate that sometimes these pumps before the news is not preluding a dump. It's all it's preluding is let's make it attractive for buyers to buy it high, thinking price is going up, create FOMO, think we're missing out, and people now are paying top dollar for something institutions paid less for, and now the people that paid top dollar, well, given from the previous day, now they're going to have to also, not only have they paid top dollar, but they're going to have to shoulder the risk going through that news. That's not, institutions don't want to do that. Let me know if that makes sense.
Yes. Yeah, it does.
Yeah. I know it's not exactly like buying a house, but if you're buying a house and there's like, or you're buying an asset ahead of a government election and you're not sure how the new government policies is going to impact house values and what the policies will do. If you've got a buyer now willing to pay top dollar more than you paid for it, you're not really worried about you selling it to this person paying top dollar and then the house market goes up a bit more. You're obviously you're leaving money on the table, but was it worth the risk of trying to sell that house? Which I think it's probably a good analogy in the fact that if you're a retail trader, a house is a huge purchase of your life. Now, when you come time to selling it, it's not something that you really want to play around with. You can't really risk trying to sell your house, leaving it too long, and then all of a sudden, no one wants to buy houses because of a new government change or new news event. Now all of a sudden, people are, let's imagine like you're trying to sell your house when it was low interest rates, and then overnight, the central bank just went from 0% straight up to 5%. Very extreme example here. But you can see like leaving it too long, if you had a willing buyer at the time you wanted to sell it, rather than trying to think, oh, what if I just wait a few more weeks? Maybe I'll be able to get, a couple fractions of a percent higher. Is it worth the risk if you've got a willing buyer now? Because if something changes and now all of a sudden...
House for Hayden, a long hold or what?
What's that?
It depends if you bought the house for a long hold or you're flipping it over. It's a big difference.
Yeah, but I mean, if you bought a house and you're wanting to sell now because of your something's coming up, if you've got a willing buyer now, it's better, bird in the hand is better than two in the bush.
It's going to be worth more at the end of the year than what it is now, I tell you.
Yeah, but if you needed the money now, if you needed to sell, and all of a sudden you couldn't, that's what I mean. The problem.
You're in my zone talking real estate.
Yeah, I mean, like the same sort of thing with trading is if you're an institution and you're holding massive positions, and you've got a news event like interest rates or something. It's not like us as retail that if we're wrong, it hits our stop loss. Maybe we get some slippage, but we lose. We're out of the market. We can be, because we're so small. That's our advantage. Is we're so small in the whole scheme of things that if we put a trade on and it goes against us, it will either hit our stop loss. Even if we get a little bit of slippage, it's not like the end of my career, is it? But if you're an institution holding a mega position and it goes wrong on you, it could be the end of your career. So is it worth taking that risk? That's why the Swiss acts as a safe haven. Very, very similar dynamics with those Swissy. It's Swiss's low interest rates, 0 interest rates, in fact, at the moment. Oh, sorry, is it 0? They went to 0, didn't they? Well, it went to 0.25 from 0. No, it went to 0. Yeah. So they're at 0. And why would people actively want to put their money in Swiss banks to make 0% return versus something else? And because this is where people are like, it's a conundrum. And if you're invested in something that's potentially going to go down 5%, or you can lock it into something that's safe, a safe haven, that's going to pay you 0%, you know you're not going to get anything from it, but taking 0% loss is better than taking a minus 5% loss if the stock market has to correct, you know. So that's what they do as well, is that they know they're probably leaving money on the table if this news comes in and it's low, but that's not their MO. Their MO is to not shoulder that risk. So ahead of that news, that's why we can see more times than not, we see really inconsistent movements. So to me, I think it's just probably likely we can still move like 90 odd pips, but I think it's going to be a fairly slow session, I think. These days typically are.
So if inflation comes in lower, Hayden, and you say and it just goes straight down, would you go short then yourself and just follow the trend?
If inflation comes in lower than expected, and it goes down, that'd be you'd be getting close to a good buying opportunity. I wouldn't be shorting. I wouldn't be shorting with the low inflation.
Right. So you'd wait till it bounced.
Preferably, I'd wait for it to bounce, unless it was because also I would say that that'd be pretty unusual for it to have low inflation and it go down. So if it did manage to go down, and if it I'd want to, that would be unusual for it to go down on low inflation. But if it went down and it was like in these areas, I'd be wanting to wait.
Sorry, I mean high inflation. High inflation, so it goes down.
Oh, high inflation.
And they just dump it straight away. Would you wait for buys? Would you wait for the bounce on that?
There's two ways to play it. There's one, the ultra aggressive way, where often when price just goes straight down, CPI very often overcorrects. So there is a potential very short term trade. You've got to be quick and nimble because price can often CPI, if it dropped, especially in a bull market, there's a very good chance if it comes in high, you can get a very good bounce. But it could be like a V-shaped bounce, but I wouldn't want to hold it for very long. Otherwise, wait for it to bounce, wait for it to settle, wait for it to form more bullish structure before you take it, because it's very dangerous buying after high inflation, because there's a narrative that these guys will spin. And the market is very structurally strong right now, very bullish. One way that they can spin it, one way they can spin high inflation is that it's that strong consumer demand. And strong consumer demand can lead to positivity resulting in earnings. You know what I mean? So a bull market can shrug off bad news pretty easily. But it's risky. It's risky doing that. The other thing so you can get a very good bounce. Otherwise, what you'd need to wait for the move to go down. If it overcorrects, wait for it to go down still, but wait for price to start slowing down, because you want to wait to see when institutions are accumulating again, and that will be at like a decent support level.
Is there a time period typically with that, or is it just dependent on the market?
It depends on the market. So sometimes it can be like 2 days. So
Right.
Initially, what can happen is that when the news comes out, all the media organizations are reporting the same news. So you get like a lot of fear, a little fear mongering. What's this going to do? This is going to crash the economy. We're heading for a recession. The central banks aren't going to do anything, and all this news just cycles across each other. So it creates like a bit of panic. And then after the initial dust has settled, 1-2 days later, then they start looking into the details of that CPI print, and they'll be like, oh, well, it's actually shows that, it was the main drivers for this inflation was this, and this we can put a cause to it. Perhaps it was fuel prices. This is a delayed effect from oil prices spiking up to 80. So it meant that airlines had put their travel fees up because they weren't sure. So they boosted it. So airlines and travel and some logistics was highly inflationary for that month. But oil prices have come down. We've been calm since then. So that's likely just to be a spike in data, which is going to get washed out in the next CPI prints. Like once those details come through, the narrative can turn, and the news stops going. The initial hype, and everyone loves to call a recession. So high inflation will likely create that sort of buzz around recession, and that can drop it. But then that's when institutions will buy into that weakness.
Yeah.
But they might not, buy. If they're buying into that weakness, they're not going to send it skyrocketing, because they're going to be very happy to let it be like a controlled descent and let people that have got paper hands close. And once they've accumulated a good like dollar cost average price, that's when price it's been supported by buyers and it's bottomed out. Then it can start to go back up, like maybe a day or two later, when everyone's still stoking recession fears. People will be thinking price comes up, I missed the initial sell, I'll sell the pullback. But if these pullbacks keep failing, then that that institutions bought the dip, and that CPI miss was a good opportunity for them to get in again at a lower price.
Yeah.
So it's pretty. I find it super interesting, like how they do this.
Yeah, it's not that easy to wade through it, is it?
No, it's not. It's not easy, but it's important to talk through it and try think about what they're doing and have like just try to put yourself in their shoes, what they would want to be doing. That's very important to have context around any move, because the stock market is not the economy. Okay, so it looks like this demand zone's holding. Coming back up to that London Open now. So at the moment, price is just bouncing around. Let's see if London Open can hold. Let's see if it wants to make another pass at these lows. But London Open right here. See what we get at these candles. It kind of reminds me of Tuesday a little bit. Is it last Tuesday? No. Last Thursday. Yeah, sorry. Wednesday was that. See, Wednesday was that big rally. Huge rally on Wednesday. We didn't get that to the same degree yesterday, but yesterday's New York session was a very bullish move. And now, after a big bullish move, London was quite hesitant to take off. And once price was consolidating here, you remember that this is the day that we got the sell down, price came back up, retested this little area of supply, and then eventually it sold off again. So this is a bit different because we're at all-time highs here. But I'm interested to see if we get something similar I mean, we've got enough time in this market for them to push price up to perhaps get out of more of their positions. So there is enough time for it to be bullish. But let's see. London opened at this point. We did have a little bit of a sell-off of these candles, kind of just grinded down. London pushed down, kind of got a trend reversal pattern going on. We were oversold on the stocky, kind of got a little bit of divergence on the fast stocky. Price is coming back up, testing these high areas of supply. So we need to see if this is just a retest. This demand zone though is fairly decent. The stocks did open up higher as well. SAP's up a bit now. Siemens is up. Deutsche Telekom is down. Most likely because US dollar's down today. Because Deutsche Telekom is T-Mobile in the US. It's their biggest moneymaker, the US consumer. Allianz is down. Rhine Metal's down. That's surprising. They did talk about defense spending. Car companies are up. So Stocks 50. Stocks 50 is doing what? So I'm trying to see how I can use Stocks 50. Stocks 50 is Europe large mega cap companies, not just German, but like Italy, Spain, Netherlands, France, all the biggest mega caps. It's really sluggish, so I think it's a good chance that we probably just reject here. 60 pips now for the open so far, 40 pips, 66 pips from low to high. Not bad. Oh, you do that? You use it, Michael? Yeah, cool. Well, we're getting nearly overbought on the stocky. Stocky on the 3 minute is, and we've got a little triple wick over here. What if there could be a sell coming up, 30 pips, just to trade it back down? See if it shows like some rejection wicks up here. But I'll be, any position I get into, I'll be taking profit pretty quickly. Like I'll be secure in it. I won't want to like hold much risk on it. So if we can scrape together, 0.5% profit for the day, be well pleased. Yeah, that was the move I wanted. Yeah. Wanted it to get a little bit higher. I'll pull back into these areas now. It's hoping they'll just wick up into this area. So, because I see this as a bit of structure, like this this zone here. So first time touch in that area. I mean, it still might come up. But it would have been nice if it didn't drop down. Because it kind of like it removes some of the buying pressure. It could have just given it a little chance for it to cool off a little bit. Holding longs to 257.80. Well, that'd be a potential good area if it can push into the zone, into that top third.
I mean,
If it can push into here, I think that could be the area to look for like a little sell back down. Yeah, so I'll probably, if I can get if price can push up on the 1 minutes, maybe have a bit of divergence up there, and then not enter on the way up, but kind of wait and see if we can get a kind of like a candle, like so, something like this up here. But what also makes sense is London knowing that price breaking above here, there will be buyers. So where's the VWAP? The VWAP could be the other area. I could look for a cowboy trade, which would be about here. Yeah, okay. So I'll probably take a VWAP trade, cowboy trade, if it does push up this high, or if it does show rejection from here, I'll look to take it back down 40 pips. But I'll need to see something like the entry would be closer to like here to go back down. That makes sense. So kind of looking for either push up to the VWAP and then looking just to retest a bit, or show some sort of reaction up here and then take it on the way back down. We're close inside that structure, so it makes sense now to travel a bit higher. Okay, did that get you out there, Michael? That hit your TP? Oh yeah, oh, it must have been close. Oh, of course. Forex gone. That's what the yesterday. Don't know, I'm mostly tired, but I just wasn't thinking. But I put my entry at Forex.com price, and yesterday there was more discrepancy, and I was like, wait a second, why am I in a trade? It hadn't hit my level, and it was because I did this pricing, which is very different to the pricing on my on the prop account, and then the prop account passed it onto my main account. Yeah. So I don't know why it changes. Like you'd think it'd be like today it's pretty close to Pepperstone. It's about less than 2 pips different, but sometimes it's 10 pips different. Okay, so that little supply is holding up. This one, this little supply area, structure, call it. The price pushed up, came down, formed a base, came back up, formed a ceiling, and then dropped down. Now it's trying to test these wicks area again, where price pushed up. So if you did take it, if it's breaking that high, then it's most likely traveling to the top. Stocky is getting a bit overbought. At the moment, it's a pretty subdued open, but 76 pips for the first hour. That's pretty reasonable. 90 is the average. Well, between 8, like 88 is the average. But making making this higher low here. Yeah, I'm keen to see what it does at this point. It's 267. Is anyone in a trade?
No, I'm flat.
Right. Chilling. The VWAP's got me interested.
Oh. 24. 28.
You guys, is anyone holding Euro Aussie?
Yes. Oh, that was weak.
Yeah, man. It's so I didn't
Slow burn, mate, isn't it? Jesus Christ.
Yeah, so because this is weeks old now. This is if the news came in as expected, I'm sure it would be trading up here. But because it didn't, it came in unexpected. It meant that we had the deeper pullback. And remember, I'll give you the sign. Yeah. I'll bring that screenshot up. So all I think is it just delays everything. So
it's grinding up, but it's quite slow.
Yeah. So this is at the time of it. So
yeah,
well aware that if there was a miss, that this level is an untested level of demand, where price really went up quickly and pushed up, and then we had a pretty extended consolidation area. Price pushed up initially, and this is a significant zone. This yellow area, and this is where price reacted from it. But then the news came in unexpected, and it completely reversed everything, gave into some deeper zones. But this one here, very much valid because of this area. And I think like all they're going to do now is talk about the next meeting now for Australia to cut rates. Europe's still not looking to cut their rates unless the tariff stuff has slowed things down a bit, because there is talk that if tariffs come in, 30% tariffs on Europe from the US, then one way to counter those tariffs would be to drop interest rates further. And if that drops interest rates further, euro would devalue, but then it makes the European goods, it kind of absorbs that that tariff impact by having a weaker euro, which I don't think is going to happen. I'm sure they'll come to some sort of deal. But to me, I think it's still structurally very strong. This pair, Aussie's still looking very vulnerable. Euro's still looking pretty strong and is the next most liquid currency outside of the US. So very much don't give up on Euro Aussie if you guys are looking for swing trades, because this zone is still pretty decent. Yeah, it's just, this is a kind of trade idea that you don't need to have one trade where it wins. Like, you can get into this trade, it moves 50 pips, take some profit, price comes back, buy again. You could probably do quite well on a move like that, because it's going to be slow. It's going to be a slow grind. That's what swing trades are. So you can be in and out and probably make 50 pips between here and here. You could probably make 50 pips 4 times, because that's a 160 pip range. So you could get in, get out, get in, get out, get in, get out, or get in, take some profit, don't close the whole thing, price comes back, go in again, close some profit. You can have like a whole bunch of small positions running that you've like scaled out on, but you've also been accumulating pips. So, and what goes with Kiwi's weaker than Aussie. Kiwi's weaker than Aussie, and this is a trade that that I'm still holding Aussie Kiwi. It didn't quite come back and follow this path, but we're getting in back last week when I posted it. That it never pulled back to this area, so I'm still well aware that it could. But the way that it's kind of broken cleanly up now inside of this clean channel, to me, it's just a matter of time before it actually hits the target of these orange lines. So where price was over here before the breakout, to me, it was Kiwi's looking pretty vulnerable. And at least with Aussie Kiwi, they're gonna, like, it's not like it's not like we're affected by safe haven or risk on trades. It's going to be, even if we're flight to safety, Aussie's probably going to outperform Kiwi in a flight to safety. And if it's risk on, Aussie would still probably be a bit slower, but Aussie will still probably outperform Kiwi just because of the interest rate differential.
Yeah.
So these are still 2 good trades, to swing trades. The rest of the mix, pound's looking very vulnerable. Pound, I'm thinking kind of missed the jump on this one, but I didn't see the pound budget news coming in. I didn't expect that. So the signs were there, but I didn't catch it. So yeah, but pound is actually looking pretty weak. So let's see. Keep your eyes peeled for pound.
Against what? Dollar? US?
Something that's going to be strong. So that could be Swiss. Swiss, if we've got risk off, Swiss would be strong. And we're just seeing pound crater on it. US dollar, I'm not sure if US dollar is going to stay strong. It depends on Trump's policies. But at the moment, US dollar has seen a bit of a pickup. But if we can stay risk off, Swiss will stay strong. If we can see a bit of risk on, then US dollar at the moment on the Dixie chart, we hit this very significant level down on the monthly time frame. Or actually on the 12-month time frame, the yearly chart, we hit a significant level. And we're having a nice little bounce at the moment. But we are getting to this area, like this is where price pushed down and then consolidated and then pushed down again. So right now we're inside of this area, which has been some previous support for the Dixie, or resistance rather. We still keep on going to this channel, so we're seeing the same move play out on the Euro US. It's just in this like channel formation. If price was able to sort of hold here and then be breaking above, barring any fake out, US dollar would be looking for a bit more of a recovery. I'm just really cautious about US dollar with the whole Trump Powell relationship. But if we are seeing US dollar strong, then pound versus US would definitely be one to watch. Otherwise, pound Swiss would be a good one. If global sentiment is improving, then I could imagine what would be another good one. I mean, yeah, pound US, probably the one I'd be picking. Pound US and pound Swiss would be the ones I'd pick.
Whether it's on or off.
Yeah, I'm still really confused about CAD, about what's going on there. And Aussie, I'm really confused. I'm not confused. With Aussie, there's a lot of risk involved with if they start talking interest rate cuts in about 5 weeks' time. That would weaken Aussie. So pound and Aussie would be weak at the same time. Pound Kiwi can be weak at the same time. Yen's the weakest of everything at the moment. So pound's actually outperforming yen. So it's really US or Swiss. They're the two ones. Euro pound is it's just not volatile enough for me. Even though it's like, it looks like a good trend here, this is a very slow move. I'm not really a fan of well, it's actually very high. It's very good value.
Isn't that the same with Swiss as well? They're kind of so slow.
No. Swiss moves fast.
Does it?
Yeah. Like there's not fast, but like faster than Euro. Like it's 120 pips in the last couple of days, and Euro pound has only moved 3/4 of that.
Okay. With CAD, hasn't Trump just said that he's going to put sanctions on Russia if they don't comply with it, stop the war within 50 days, which may affect oil again? So that's the trouble with CAD, isn't it? It's highly reliant on the oil price, isn't it?
It is. The trouble with oil is that when you do oil contracts, you can buy oil at a price, and then you pay for the contract. Like, when you buy something or get some service, it's like we've completed the work, but you've got 28 days to pay, something like that. So
Credit.
If something happens in oil, it might not show up in the oil price. Like if it's at the Middle East, oil can spike, but you could have oil prices go higher. But then when Canada sells their oil, they might not actually receive the money from those oil purchases for like 3 weeks, 4 weeks later. So you don't actually see the move in Canadian dollar until there's a lag between oil prices and CAD movement, and that's a pretty tough. It's a pretty tough relationship, trading oil and CAD, because of that. Because old way of thinking, and I'd never had much success with CAD, was like, oil prices are up. Oil's over 10% of CAD's economy, so CAD should be strong with these oil prices high. But it just doesn't show up immediately. But then you see that you give up on the trade, but then you see Canada, for no reason, be strong 3 weeks later. And that's when you know that the money is flowing from those contracts that they sold prior. So very, very difficult with CAD and oil. All right, so this is a little rejection here. So we did push up into the zone. It must have taken, by now, it must have taken your take profit, Michael. Price is still kind of struggling up here, but we're getting overbought. We've got some bearish divergence up here now. This is a bit of a support that were created. Now it's whether we can break down underneath this area. So this is kind of like this pattern that I was looking for. this kind of push up, get some divergence at this area. You've got this bottom of this little bit of structure here, where price is tapped into, created a bit of a support. Is it going to just drop through here? And then we've got some clean candles on a higher time frame that we could easily just drop down like 20 odd pips underneath, like it's doing now. But I'd feel more comfortable if this candle kind of just took out this doji high first. Created like a wick like that. Really tried to push up, just drag some buyers in, reject, and then third time trying to hit this support level. Third time after rejecting up these highs, I think that's the time that price could break through here and then travel back down to the bottom of these zones. So I don't want to get caught in a fake out breaking through this support. I would like to see like a wick up higher and like a pretty nice rejection, like a stopper candle. But the structure is looking good at this demand area. If this supply area fails and we're pushing higher, then that VWAP probably comes in contention. The danger is once it's breaking above here is going for too much, because it will be counter trend to the move for London, and you have to start fighting momentum at that stage. So momentum can, price can stay. If momentum takes it, price can stay overbought for quite some time. So it can be very dangerous, especially in a thin market, that you get caught with like computer trading algorithms that are just buying the dip, buying the dip, buying the dip, buying the dip. But if you get a big rejection from up here and it's coming back down and it's looking like retesting the support again, then I'm pretty sure the probability trade would be a rejection from up here and then break, like once it's already tested the support a bunch of times, there's a very good chance that we break down and then at least get to here. Then we maybe that's the end of the move for a bit, because around 9:30, so another 30 minutes time, Asia officially will be coming to a close, so we can get a bit of a swell of volume with Asia closing, as Asia traders kind of shore up their positions, kind of real hedge themselves, so that they're going to be immune to the volatility that CPI is going to bring. That way, like, if CPI goes up or down, they'll have themselves hedged that, they're losing, their bullish trades will be losing maybe, but their bearish trades will be winning, or vice versa. And then when the Asia market reopens for after market hours, which will be around 10:15 UK time, we could actually then see a fairly steady move until around lunchtime. Then when it gets to lunchtime UK time, you're getting very close to CPI, and that's where it's like there's just no volume in the market. So when there's no volume, it doesn't take much for it. Either there's no one trading, or not many people trading, and the market's just sideways, or you can have small positions actually moving the market because there's just such little resistance anywhere above or below price. Okay, so what was the final pip count? 82 pips. Okay, so it was a fairly decent session. Sorry, fairly decent movement. Slow as hell, but it still moved a decent amount, 80 odd pips. It's very interesting to see what this support's going to do. Can it break through here?
Yes.
Oh, there it goes. Straight down to this one.
When you get, what's your entry level there, Hayden?
What do you mean?
Well, are you going to enter a trade on a short?
It
It's
kind
the
of
move now.
It kind of moved without me. I was hoping it was going to push up a bit more, like have a bit more of a wick rejection, and then coming down, and then I would have wanted to get in and take the most of this move, but I can't get in for a sell here because this area is still a bit of an issue. But like just trading between the zones, like it's just trying to explain. Like this space, like this markets are so fractal that this happens on, it's any time frame you'll find this stuff on. I see it's like support, and then eventually that support is just getting so tested that when it breaks, the next support was down here, and it just in a single candle. It's just annoying when it's like that because a single candle, that was kind of the trade. If you wanted to take an easy trade just between zones, that was it. But it happened in a bloody single, that was literally seconds of this 1 minute candle. And that was it. But I was waiting for a bit of a wick up and then down and then take it to go down. Did anyone grab it? Oh, no, you caught 10 pips. 10 pips the good old days. Yeah, 10 pips, get out. Yeah, it happened pretty fast. So if you missed it, don't. These are the days it's dangerous that you just find yourself taking impulsive decisions. Oh my gosh, there's someone. The road, like where I sit, my desk. We're on the fourth floor, and I can see out my window. I'll put my camera on, see if you can see it. See out. Let me know if you can see my camera. Where's the? Oh, there it is. Can you? Oh, you can't see my camera. It's not working. Why is it not working? Can you see? You can't see it. It's showing some Sony thing, isn't it? Yeah, okay. Yeah, you can't see. Anyway. There's these people getting stuff out of the car. I don't know who these people are. But they've dropped their keys down the drain. Man, that sucks. Yeah. They've got all their pram stuff out, and then looks like they dropped their car keys. The woman's like on her stomach. They've actually got gloves, but they're like halfway down the drain pipe. Ah, gosh, man. See our price pushed down, rejected that area, and now it's back up here again. So
The same philosophy. The VWAP entry.
oh, the VWAP's ages away. It's all the way up here.
So on top of this support, would you look at that? 24,262.
Oh, no. If it's,
or resistance rather.
yeah, if it's pushing up there again after doing this, if like after a pullback like that, if it's pushing up to 262, it's most likely going to take this high. So I'd be looking closer to like 300.
Right.
But if it's sort of breaking down here, so if it can start to fill this wick, it's a bit risky, but you could probably take a short now to fill this wick. And if it can break, like, just be careful of the London Open price. But I think you can take, like, fill in this wick now. I don't think it would be a bad shout. It's kind of trying to push higher, but let it reject here again, and then if it starts dropping down, I think you can like enter a sell like now. See if we can get a wick fill. Just be careful in this one. Like, just have a quick finger to get out. This is hyper scalping. Just needs to break down past this area, fill this wick, retest this support again, secure some of your trade for 20 pips or 15 pips. Move stops at break even, and then just see with a bit of luck, price can break through here, but you don't want to hold anything over the news. Okay, come on, drop down, drop. Because kind of retested it up here. A couple little rejections. Just need to break underneath this candle. We can come down and retest this doji. Another 15. Oh, there we go. So about 6 pips in profit. Come on. Take out this doji low. Okay, I'm going to move my stop to break even. Just to see if we can get a little look. I'm going to take some profit at this point if it drops down another 6. So I'm up 11 pips now. There we go. Take some profit.
That's me as well.
Yeah. And now if it can break through here, beauty. If it can get back to the London Open. But yeah, it just took 11.4 pips it took. Yeah, just stops at break even, guys. Like, it's just there's bullshit price conditions because of the news. I wouldn't be surprised if London do in the next couple of hours. I would not be surprised to see price push higher. Because if it pushes higher, there's got to be people that are willing to buy breakouts, and after a big consolidation, it's very likely that price will have, even in a weak slow market, this is still accumulation of price, and there's plenty of time before that news that I think there is probably a good buy opportunity if price is pushing higher, because I do think then the VWAP comes in focus. So if you do want to take the risk, just the only danger is it is thin market conditions. So if there is a headline, you're going to be exposed to headline risk. But given that price is still holding above the support, we are still getting oversold on the stocky. If you do see any sort of signs of strength, London know that they can buy here, and if they can push price above the London high, there will be breakout traders waiting. and breakout traders will push that price higher. So I do think if we're trading back above the London high, you could probably get another 30 pips to the upside to trade up into that VWAP, potentially even take out the Asia high. Oh, here we go. Price is dropping down a bit more. So we're back to the London Open again. So this London Open, if you look at if you look at like what the London Open's done, it's just we're literally back at where we started an hour and 20 minutes ago. So anyway, who you guys take the sells? Who took the sells?
Me.
We had to wait
Yeah,
a long time for it. Small.
No, I didn't.
You didn't take small pip movements, isn't it?
No.
Small one, yeah, man. So,
Oh,
yeah, when it's slow like this, these are the days if you can like dragged out from that move, not even 0.5%, more like about 0.4% I got from that move. So that's fine. You know, on a day like this, that's I'll be well pleased just taking 0.4%. Because if you can do that consistently, even 0.5% a day consistently, equates to like a fairly decent amount long term, like over a month. Obviously, we don't win every day, but yeah, see that now the buyers coming back in. So just shitty conditions, man. CPI day. I'm gonna have to scoot, guys. All right. So hope it was still educational. That was the main thing. So there was a decent little move we got after much waiting, but boring ass day. Just a boring day.
cheers, Hayden.
Cool. All right. Well, tomorrow's another day. So be careful over CPI. Okay. It's not our job to guess the news. Know that the big boys also aren't guessing the moves. What they're going to be waiting for is to see what comes out of the news, and then they're going to reposition. So let's just not try to guess the news. Let's just try wait and see what the inflation comes out as. Let's just hope for a miss either side. If there's a miss either side, it's much easier because the positioning is going to be pretty obvious. If it comes in as expected, it's going to be a pain in the bum. But I'm kind of hoping that comes in. Kind of hope it comes in high, because I think the sell-off will be much easier to buy into than if it comes in low. Because if it comes in low, I wouldn't be surprised to see us at all-time highs again, and I hate trading all-time highs. So selfishly, I hope it comes in high.
Thanks, Hayden. Bye, everyone.
See you, Danny.
Yeah, mate.
Hi, guys. I'll see you tomorrow, okay? So,
Cheers.
see ya.
Thanks, all.
Thanks, Hayden.